Good morning, everybody. Salam alaikum, and thank you for being here today. What a fantastic venue to support the DIFC Fintech Week. So great to see so many of you, and so great to see so many of you really participating and engaging with the talks as well. A fantastic opening speech as well. Arik, thank you so much for being here. Thank you so much for taking time out of your busy schedule to be here and to speak with everybody. It would be fantastic if you could start by telling us a little bit about yourself, a little bit about the company, and then I'll introduce myself and explain why I'm moderating you.
Great. So first of all, thank you very much, for inviting me. When I got the invite, I was super excited to join. I think it's a very important event, especially for Rapyd, which is basically building a hub in the DIFC. So from our perspective, to participate and contribute to the ecosystem is a very important thing. A little bit about Rapyd. Rapyd is one of the world's biggest fintech startup companies. So we're a company that has a goal to build something like the Amazon AWS of the fintech space. So we're building a worldwide infrastructure that enables other companies to build on top of us financial applications. When I say financial application, I mean anything from a checkout page on Shopify that you want to collect a payment, all the way to building a neobank on top of our platform. We basically came up with this concept of fintech as a service in 2016. And since then, we've been building a global company that raised up until today almost $820 million. We're distributed across 106 countries in the world and growing especially super fast. And we're building our own GIC hub here in Dubai.
Very cool. And maybe you could share with everybody a little bit more about your background personally and how you landed in this particular industry.
So landed by mistake. I'm not from finance, had nothing to do with finance, fintech, payments. I never even understood how it works up until 2015. I'm a cloud computing guy. So I had a company in the cloud computing space that I sold in October 2013. And then basically after 2 years of working for the company that acquired my company, I decided to go and do something else. And I made a very stupid mistake by going into consumer payments. So, I was sitting with my co-founders back in 2015 was the days that Uber was the hottest thing in the world. Everybody wanted to be the Uber of something. If you remember these articles, every company was the Uber of. And, we were sitting, scratching our head, thinking what do we want to do is the new venture. And, we made a mistake, which ended up a very big mistake of going into consumer payments and trying to build some kind of a wallet that would compete with PayPal. Now, you need to understand when you have no clue in fintech, finance, and you don't even understand what it is, you think it's easy. I know technology, I'm going to build an app, I'm going to build a backend, and I'm going to offer people to move money like Uber, something fast. We stumbled into every single problem that exists on planet Earth when you're trying to build a financial application. First of all, I learned a new word, compliance. Never heard it, right? Suddenly somebody said, no, you cannot do it. Compliance will not approve. I said, what the hell is compliance? He said, you need a compliance officer. You need an AML. You need this. You need that. The bank is not going to allow you this. The bank is not going to allow you to do that. And then I understood that it doesn't matter how good I know technology and what type of code I can develop. There is still somebody behind the scenes that will not approve it because the system works differently. So we stumble into every single problem, from learning what KYC, KYB, AML, sanction screening, what is a PEP, what does it mean to do account opening? And like a year and a half into this venture of trying to build a type of a PayPal, we looked at each other and we said, it cannot be that we need to build this massive infrastructure to just kickstart our business, because we're not even building the business. We're building this infrastructure that is a generic financial services infrastructure. Account opening, KYC, money in, money out, issuing a card, doing FX. Okay, it has to be a platform somewhere that we can just plug our capabilities into. And back in 2016, there were no platforms. Nobody was able to provide a platform. Every single company in the space was a one-trick pony company. A card acquirer, a card issuer, an FX company, somebody that only does disburse, KYC specialists. And we said, okay, let's pivot the company into a platform play, and we'll try to build this platform that does everything as an API. So when somebody else wants to build something, they can just come to Rapyd, plug in their tech, and build everything. People told us it's a very bad idea. People told us, don't try to do it, it's impossible. And we decided that we're still going to do it, and it turned out to be a very good idea because Everybody wants to be a fintech company, but nobody wants to build fintech infrastructure. Nobody has the ability to build it in scale. By the way, not even an Amazon and Google and Uber or Facebook really can do it at scale. And we ended up pivoting from a consumer payments company, which was a very bad idea, to a B2B enterprise play, API, money movement technology that ended up operating in 106 countries across the globe and scaling super fast.
Very cool. You picked up on a very, very interesting point, and I know you and I briefly spoke about it earlier. Compliance and regulatory oversight. For those of you that don't know me, I'm a lawyer. And for those of you that do know me, please keep quiet for the next 14 minutes. One of the most interesting things I think we see with innovation is the balance between regulation, oversight, and innovation. It's almost like a trifecta of things that have to work well together. We see regions like the DIFC provide a fantastic framework for innovation in a safe and realistically regulated environment. What do you think, as somebody that's pioneering in the fintech space, is some of the challenges that new fintech companies are seeing, and what do you feel regions like the DIFC are doing to overcome, or doing things to overcome those challenges?
So I think there are two different types of regulators in the world. The one that basically enable business by providing you some kind of clear boundaries, what you can do inside this boundary. Okay, you can play inside this box. Don't go too much to the right. Don't go too much to the left. And there are regulators that just block business. Two different types of regulators. I think the DIFC definitely is in the first category of enabling business, like some of the best regulators in the world. And I think at the end of the day, fintech companies and companies that are trying to be innovative, they stumble into the same problem again and again everywhere in the world, that they've been categorized in the same category like a bank. And when you're categorized like a bank, all the hurdles of the bank with all the requirements and everything that is related to it are starting to slow you down. And you constantly hear, no, you cannot do this, no, you cannot do that, instead of hearing, you can do that if you do this, right? And then the difference in the sentences is huge. And I think that a company like ourselves, we always look for the second part, like, okay, tell me, how can I do it? What do you want me to build from a technology perspective? You want transaction monitoring? Great. What do you want? You want alerting? You want sanction screening that is a little bit more sophisticated? You want me to do account opening in a different way? Explain to me, what do you want me to do in order to enable the business? It is a very critical discussion to have with the regulator. And I think that, we operate in 106 countries across the globe. I think we're regulated in 55 directly. So talking to regulators is pretty much my wake-up call in the morning. Not a very good wake-up call, by the way. But it's very different in a lot of different countries, and it's very important to understand that at the end of the day, the technology is here not only to be disruptive, but to enable business and to enable things to be faster. Just need feedback from the regulator. What do we need to do on the tech side? So the regulator will agree that this area that we play in and we're trying to do something here can be a little bit extended with technology.
I think you're right. I think a lot of regulators really struggle with the concept of legacy systems against, new age technology. I think they believe because a regulatory framework has been created, everything can nicely fit into the lanes of that. And I think a lot of what that really comes down to is future-proofing. What does a regulatory framework look like in terms of its vision, its future-proofing? Who does it want to attract to that particular region? And what type of companies is it trying to engage with? To that extent, if you were to produce a crystal ball and say, look, what does the fintech industry look like? Maybe more so for your lane rather than a general statement. Over the next 5 or 10 years, where do you see the major changes happening?
So when we started the company in 2016, when we pitched to VCs, we pitched the thesis that every single brand on planet Earth that has consumers, doesn't matter in what business they are, they want to become a fintech. And everybody will try to monetize on their customers by offering them financial services. That was the concept that we pitched in 2016. And if you fast forward to 2022, you see almost every company that has a significant consumer base trying to offer financial services to their customers. I mean, we're not talking about lending. We're talking about, Apple becoming a payment method, Google, Samsung, right? All these companies, Amazon, they're becoming payment methods. Companies are offering different types of consumer-facing services, buy now, pay later, and a lot of other things. So we have a true belief that everybody will try to become a fintech and will try to monetize on financial services to the consumers, because at the end of the day, this is the best way to monetize on a very large consumer base, and it's the stickiness point that you have. People get stuck with whoever offers them financial services, and it's building a much longer term relationship than just buying in IKEA a furniture or going and buying something on a website. At the end of the day, if you're able to upsell, cross-sell your clients with some kind of an offering of financial services, it will be stickier. You will build a much tighter relationship with them. And this is what we believe will happen, is that almost everybody will try to become a fintech or a financial services offering to consumers.
Yeah, I think you're right. I think you mentioned a very familiar buzzword earlier on, which was cloud. And I think if we flash back 5, maybe 10 years or so, everybody was in data. Everybody was big data. Oh, this is where I'm at. Look at me, we're a big data firm. Oh, and everything was about monetizing data. And I think you're right. Flashing forward, things will become a lot more finance oriented. How can I monetize this? How can I become a payment service provider? How can I dip my toe into this and create some value?
The simple rule about money, and this is why correspondent banking exists, is if you touch money, some of it is going to stay with you, right? That's the concept around money. So it's clear that if you're trying to monetize by offering financial services, you're going to generate additional revenue, and typically this revenue stream is growing, is incremental. It looks like SaaS, like month over month you will get revenue from clients that basically you monetize on it, because it's not a single transaction. And this is what businesses are looking for this recurring revenue. And this is why everybody's going into financial services, even though they're not a financial services company.
Absolutely. Maybe in that vein, you could share some of your insights into what individuals could do to perhaps protect themselves. And in that respect, I mean, it's very easy to identify a traditional legacy financial institution. If you send money through your bank or you send money through a legacy foreign exchange firm, people recognize the name. That's great. But perhaps for people who aren't so familiar with organizations like yourselves, what would you say is some good telltale signs to show a reputable organization against ones which are perhaps not quite as skilled or experienced in the industry?
So I think that at the end of the day, the important thing is who you're sharing your data with, right? And when I say sharing data, I don't mean when you browse the website and you accept cookies, right? That's not sharing data, at least from my perspective. It's more who you share your bank details with, who you share your credit card details with, and these type of things. These are the things that are important. And today, people don't really think, because they go on a checkout page, they need to pay, they fill in the form, and they think the payment is done. And these days, there is even additional, payment capabilities. You can link your bank account, you can do a real-time bank transfer. And a lot of times people don't understand the consequences of doing it. And it's very important to understand that not every time you see a checkout page and not every time you see a payment page that is with your bank, it means you're protected. And there are the basic things you can look for, which are can be, manipulated, like you need to see the logos of PCI compliant and the card schemes and your bank logos, which is the first line of defense, which is very weak because people can copy it. But at the end of the day, I would really look at who is powering at the end of the day your payment or your process, right? And from a regulatory perspective, in most regulations, the companies that are using payment capabilities, they have to state on the page who is the licensed entity, who is moving the money, where are you regulated. And a lot of times people don't care, they don't read, but I think it's important to understand that if you're trying to do something that is meaningful, like a bank account verification process, transferring funds not from your bank app, or even paying a significant amount with your card, you need to check who is powering the payment, where they're licensed, because at the end of the day, it will give you the real visibility, how legit and how protected you are as a person when you're inside this type of a transaction.
So in our final couple of minutes here, we've spoken about you, where you came from. We've spoken about what you would do to potentially change the future and what some users could do to keep themselves safe. Let's focus on today. What is it and what are the big things that you guys are focusing on today to really improve user experience and the fintech sector as a whole?
So first of all, a lot of people don't know it. Actually, in this region, people know it, but if you look at the US or Europe, people don't know that most of the payments on planet Earth are not with Visa and MasterCard. People think everything is Visa and MasterCard, the cards, I will pay with the card. What's the problem? It's a 16-digit number, I will pay with it. The reality is that, first of all, there are 2.3 billion people that live on planet Earth that have money and they do not transact with Visa and MasterCard, American Express, Discover, whatever it is. So there are a lot of payment methods. And for example, Rapyd as a company operates in 106 countries across the globe, and we support 900 different payment methods, even more, which means different types of wallets, cash points that people pay in cash, different types of bank transfer capabilities, different kinds of cards. There are a lot of ways that people can pay, and like I instruct my team, if somebody wants to pay with chickens, make it happen, right? Allow people to pay. And the complexity of this is providing a seamless checkout experience in every single country that will convert the best way. And the funny thing is that if I will show you, for example, a checkout page in Korea, you will say it's a horrible experience. There are so many questions. I need to fill in so many different details. I have a token that is physical that I need to input into the payment page. Who is this person that actually pays, for example, on Amazon in this process? But if you will show a Korean person an American checkout page, which is seamless, click to pay, they will not click to pay. Okay, so there are a lot of psychological elements. Every country has its own implications. For example, in Korea, they like security, they like questions. In the US, they like seamless. Indonesia, they like to pay with bank transfers, they don't like to pay with cards. And the complexity for a company like Rapyd is that we're trying to convert the payments in every country in the local way that people are preferred to pay. And it's super complicated. It's not a checkout page for Visa, MasterCard. And doing this tuning, which requires, by the way, a lot of buzzwords like analytics and machine learning, and you can throw in a lot of buzzwords into the room, but at the end of the day, technology that needs to understand what is the best way that will convert in every country for every single payment method. And I think this is probably the biggest effort that we're investing in at the end of the day.
Fantastic. Well, look, thank you so much for taking time out to join us here today. Is there anything that you would just, I guess, in a 60-second soundbite, finish as a kind of closing sentiment?
I think at the end of the day, the reason why we came to the UAE, to Dubai, and to the DIFC is the fact that we're big believers in what the DIFC is trying to do. We're big believers also in the potential of building a significant regional hub from this country and from this city. I think the DIFC gives us a great framework that would allow us to do significant business, and we're super excited to scaling the Rapyd offering into the region on top of the DIFC.
Fantastic. Again, thank you so much for joining us. Thank you so much for joining me. And everybody, thank you so much for taking the time to listen.
Thank you.